You are a wonderful God. Oh, my creator. Only you are.
What's good, YouTube? It's your boy Doyle back with another video. In today's video, I'm giving away some free sauce. I know the video title is kind of like crazy, like trading indices is more easier to trade than forex pairs, but let me explain, because once I break this down and show you the little extra sauce that I'm about to try to give y'all today, hopefully it can help. You're gonna understand why it's kind of easy to trade indices. Now, what I'm about to show you today, I apply it to NASDAQ. You know what I'm saying? Yeah, so let me explain why I believe that indices are more easier to trade than currencies. You gotta understand that currencies are not a trending condition type of like pairs. Like, they're not trending ever. You might think they're trending on a lower time frame, but a higher time frame, they're probably sitting in the range. Okay, they're never just gonna be constantly going up. Never. It's gonna pull back. It's gonna be mirroring itself. It's not gonna, like, forex market does not trend long. It's a little trend pullback. I don't think the forex market is ever trending. You know what I'm saying? Because at the end of the day, if you look at the higher time frame, look at the weekly, look at the daily, most of the time it's in a range. Whether you think it's trending or not, most of the time it's in the range. So currencies are not made to buy and hold. Now, indices, on the other hand, you can buy and hold easy, because investors, that's what they do. NASDAQ, Dow Jones, like, you know what I'm saying, S&P, they buy and hold that. So that is a bullish condition type of market. Okay, so all we trying to do is catch an entry and hold that for multiple days, and most of the time you're gonna get high risk rewards. So I'm saying this to say this: if we know that on indices that it's constantly going up, then we should only be looking for buys. Now, don't get me wrong, some days it does drop, but when it drops, what's coming next? A correction. So when I see that, say NASDAQ is dropping really hard, I'm ready to buy now, because all I know is that they're dropping it low to get other investors in to buy low. That's all I'll be looking for. Like, okay, y'all can catch that buy. I mean, y'all can catch that sell. I'm waiting for it to drop and start rejecting a level, which I'm going to show you today, and then I'm going to get into that position to buy and go to that next level. So I mainly buy indices. I would never hold a sell. That's stupid. But we already at an advantage because this is a bullish market. On currencies, no. It can be a bullish market one day and a bearish market the second day. It could be choppiness. You know what I'm saying? We don't know. And now I'm starting to realize that a lot of people do like trading indices, because it's really not that hard. If you got a bigger account, that's the problem. People be trading indices with a small account. If your account is big, you're not gonna really trip about it. I still stay far away from US30, because I don't know, that's a demon. But other than that, like, indices are not that hard to trade. Once you get the strategy, get your risk management order, stop trading these little ass accounts, you can trade indices and you can catch way more moves faster. But what I'm about to show you, you're gonna be catching over 100 pips for sure. But yeah, so let's go on the charts, and I'm gonna show you where the banks look for to do major reversals. Now, again, we know that indices are a bullish market, so let me just show you this. I'm done talking. Let's get on the charts. This is the entire Euro USD. It dropped, went back up, correct itself. So everything is getting corrected. Like, this drop right here, correct itself. This probably about to go up now. You know what I'm saying? But we don't know. But I'm just trying to show you that on the bigger, the macro scheme of things, forex pairs are not a buy and hold. You know what I'm saying? Swing traders, I know y'all not swinging that long. Okay, I'm gonna say that y'all not swinging for that long. Trust me, because there's gonna be a lot of choppiness. Now, let's get into the indices. Y'all know I like NAS100, so I'm just gonna use NAS100 for this example. Now, look at NAS100. You can't tell me that this is not a bullish market. We have a few corrections. Don't get me wrong. We got like a correction right here, like this correction right here, this correction right here. But overall, this market is bullish. Look at Euro USD and look at NAS. Now, since we know that this market likes to go up, we should be participating in buys. Now, I know y'all ready to get for the levels and stuff that I was gonna talk about, so let's just get into it. So the banks like to trade off of certain levels, like even numbers. I guess I don't want to say quarter points, or what they call it, quarter theories, because what I am about to use is like a different type of increments. Okay, so if you start off at 000, you're gonna want to go in increments of 125 pips. Okay, so let me go ahead and put that on the chart. 125 pips. I don't even know what that is, so I'm gonna go on the 4 hour, and I'm gonna use this, and I'm gonna drag it up to 125 pips right here. Oh, let me do that over right there. Okay, now let me adjust that. Okay, I'm gonna just do a few levels. This is gonna take forever. Oh my goodness. Okay, 25. Okay, I'm gonna just do roughly 750. We got 25. I don't got time to be doing all of this all damn day. So these numbers right here is very sensitive. Okay, they are very sensitive, so you're gonna see moves. Okay, you can use these levels, increments of 125 pips. Okay, increments of 125 pips. Write that down, whatever you want to do, but these are the levels that it likes to bounce from. So let's put this into perspective. We know indices are bullish. Okay, we know that. If we know that they are bullish, why not wait until it gets to one of these levels to buy? Or whatever strategy that you use, mix that with these levels. Okay, so it don't have to be what I'm using, but I'm just saying, like, put these on your chart, so once it gets to this level, and if you see a setup on that level, you should take that buy. You know what I'm saying? Like, I'm mainly a buyer when it comes to NAS100. I like buying because I know that long-term investors are buying. So let's go to the 15-minute chart, and I'm going to show you these rejections. Okay, so August 3rd, you know what I'm saying, the market dropped crazy, but where did it stop to? The 875 level. Okay, what did it do? Reject, went to the next level. All right, on Friday, that was Tuesday. Monday, what we get? A bunch of rejections on that level. What did it do? Go to the next level. Okay, now sometimes the level is going to be in the middle. When the level is just sitting in the middle, it's not really like the candles are not really sitting above the level or sitting below it. It's not really much you can do. Okay, like this right here, it's just going, like, you know what I'm saying, the level is literally sitting in the middle. So if it's sitting in the middle, it's just, you know, it's not really gonna do anything. Okay, but see, like this day, I knew that eventually it was gonna correct itself. So I like these levels is because once you see drops like this, you know that it gotta stop at some level. It could have stopped right here, or it could stop right here. It went a little bit past the level, but it came back into that level. So once it came back into that level, you should be looking for whatever strategy you use or something up in here to take it to that next level. You get what I'm saying? So it's not gonna, like you see how it's up in here. Let me erase some of this stuff. Let me erase some of this stuff so I can show you that you can literally wait until it gets to that level and then just trade off of it, you know, instead of constantly trading every single day. Because some of y'all probably be taking these sales and stuff. I mean, that's cool. Don't get me wrong. This move will make you have a little FOMO. Like this drop right here will make you have some FOMO, but I'm not tripping about that because I want to catch it going back up with a guarantee going back up. We don't know what this was. This could be news, anything. We don't know what that was. I caught this move, you know what I'm saying? So if it's on, like, this is a beautiful setup right here. This is beautiful. I'm loading up because it's on, I'm just call this a bank level, okay? I'm gonna call it a bank level. If it's on a bank level and you see a setup happening, you get a reaction, I'm taking it to the next level. And we know the next level is 125 pips. You don't need to catch all of that. You can catch 70 of that and be good. You can listen. You can literally catch 80 pips a week and be profitable. You can be good. I don't care what the bro. What the fuck? Hello? Bro, I don't know what the hell that was. Okay, so let's start this over. I don't know what that was, but let me say this. My microphone was just tripping. I don't know what would just happen, but let me say this. If you can catch 1 to 2 setups a week, because sometimes I'll be trading twice a week, 3 times a week. Sometimes I think I'm gonna just do 3 times a week. But if you can catch 1 to 2 good setups a week, or maybe you lost on Monday and you want to catch a big move on Thursday, which Thursdays are volume type days, you can get a great risk reward, take it to the next level, which is 125 pips, or you can go with a good 75, 80 and be done for the week. You don't even need to keep trading. I think the most profitable traders don't trade every day. Facts. They don't trade every single day, man. Y'all be showing up every single day and y'all be getting fucked up. Straight up. So if you can get a good RR starting at this level and take it to the next level, that's an automatic 125 pips. But you don't even need all of that. You know what I'm saying? So these levels get respected. Look again at the 750 level. You can find something up in here. You know what I'm saying? What we got right here. This is a rejection right here. This up in here, this is a rejection. If you see that it don't want to get to this next level, what level is going to go to? Up here. That's another 125 pips right there. Now look, now NASDAQ do have bearish days. I mean, NAS100 do have bearish days. Do I care about this? Absolutely not. I don't. And I don't even really trade Fridays like that anymore. So I used to, but now I really don't touch Fridays. But I just want to say this. If you can catch it on the level and you see your setup, it don't have to be the setups that I use, but if you see your setup on these levels and it's looking bullish, I would take it. You know what I'm saying? I would take it. Like, you gonna get like stuff like this. Yes, it's gonna reject from it sometimes. Yes, it is. It is. But this right here, this is the entry right here. You can do something with this to take it to the next level. And again, sometimes it's not gonna go to that next level. It's not. But if you get in right here, you move your stop loss to break even. None of this is guaranteed. Let's not cap. None of this is guaranteed. But if you up a nice amount, move your stop loss to break even. Or if you maybe like, if you want to do like this, halfway to the next bank level, move your stop loss to break even. Something like that. But yeah, these levels are very sensitive. So if you can mix that with whatever you use for the smart money traders, if y'all using like order blocks, or I don't know, for if y'all using EMA, whatever you use, man, if you can catch it, and I feel like this works best at the beginning of the week, because if you can catch this at the beginning of the week, like look at this, we got a bank level on a Monday. If you want a bank level on a Monday, you can potentially hold that to Wednesday or Thursday. So you can hold it from, like, say you something like this. Let's do it like this. Let me put my box right here. So right there, you get in for a buy somewhere up in here. Stop loss is down here. This is a Monday, and you can hold this bad boy all the way up into here, or a little bit lower. But that's a 1 to 7. That's literally a 1 to 7. If you can be patient and wait for it to get to the level. It's like a break and retest on these levels, but you gotta mix with other stuff. You can't just strictly trade off of these levels. Like, I will not steer you wrong. You will just lose if you strictly trade off these levels. Look for your setup, okay? And if it's on this level, this is extra confluence. You know what I'm saying? I was gonna put this on the course, but I'm just like, no, whatever. I'm just gonna bless everybody. Just whatever. I don't even care. Like, whatever. Like, here go another one. This is a Wednesday. Bounce off that level. This is a Tuesday. You're gonna want to catch these at the beginning of the week. So look, It did it twice. It literally did it twice. This is Tuesday. This is Monday. You can add on to your position. So say you got in somewhere over here. Just say you got in late. You got in right here. You hold that to the next day. You see an entry bouncing off of that. You hold it to the next day. That's 240 pips. Like, I mean 250. And you want to keep trading every day? No. No, bro. You don't have to do that. And then what did it do on Wednesday? Did it again. So it's 1, 2, 3. Sauce, bro. I'm sorry, bro. And then went to the next day, and then all the way to Thursday. So you could have held this entire from Monday all the way to Thursday and be done. And then you don't have to do that. But if you want to, you can. But I'm saying this, that indices are better than Forex Press because you have a higher chance of being able to swing and not getting stopped out. You know what I'm saying? Of course, we can't win all the trades. We cannot do that. I'm not going to say, oh, trade US30, SPX500, and NASDAQ, and I mean, not NASDAQ, but NAS100, and you're going to win because you're buying. No, it's not going to always be like that. But your chances is increased because the overall condition of that market is bullish. You get what I'm saying? So these levels, I'm going to say it again, increments of 125, start at 0, yeah, start at 0, and just count up 125 pips. Put your line on there. You know what I'm saying? And go below too. Because again, NAS100 will have corrections. But that's the thing. When it do drop, what are they doing? They're getting the investors ready to get at that level. I mean, get in at that level. You know what I'm saying? So I hope this helped you, man. Yeah. Go kill it, man. I use this only on NAS100. I don't even put this on US30 or SPX500, but it still works. You know what I'm saying? But y'all know I trade NAS100 faithfully. But that's all right. I can't even talk. That's all I got. Hope this helped you. Yeah. So I got peace and love.